This is Small Business Conversations with Akona Machoba, unlocking essential advice, opinions, and key issues that affect South Africa's small business community.
Remember that company you started a few years ago to formalize your side gig that you had great ambitions for, but eventually ran out of fuel to sustain and forgot about up until this very moment at least? Or that time you signed on as a director of a company your friend or family member started to help them fulfill registration requirements, but is no longer really active today? Well, that company, which exists as a registered company and is on SARS's radar, but no longer on yours, could land you in trouble with the taxman if the proper deregistration or liquidation processes were not followed to finalize the business's economic inactivity. To help explain why you need to be concerned about this is tax specialist and CEO of Hobbs Sinclair, a Cape Town-based financial services firm, Neil Hobbs. Welcome to the pod, Neil.
Thanks very much.
So, first things first, can you please explain what exactly is a dormant company and what conditions a company would need to meet to be classified as such?
Okay, you've explained it quite well in your introduction. It's normally something, you have a great idea, or a couple of friends, you get together and you say, oh, we've got this great idea, we're going to form a company, we're going to sell supplements to a gym or whatever idea it is, or we're going to buy a piece of property and do a development. So you give an instruction to your accountants and they form a company, and that company is then registered for tax. The project never comes off, you forget about it, or it runs out of steam at some point in time, and it kind of drops off your radar that in fact you formed this company in 2014 and you haven't really thought about it since then. Your accountants may have been attending to some annual returns, but in fact what you haven't done is your duties as public officer for that company in terms of submitting tax returns. So that is a dormant company. It's a company you formed for a purpose. The purpose has vanished and it sits there in a sense on the shelf.
Expand on that, Neil. Is there a time frame that a company would have to kind of fulfill in order to officially be a dormant company, or is it just one that I forgot about and I've kind of moved on?
Yeah, a dormant company, really, it's a kind of generic phrase we use. It's not something that's defined as such. Yeah, so it's a company that you're not paying attention to and that generally is not trading.
So at the end of 2022, SARS made some changes to admin penalty rules, which will have implications for these companies. Tell us more about these changes and the consequences they will have for business owners and directors.
Okay, the first thing I want to draw attention to is, in fact, this has been in tax law since 2012. So the law has been there for a long time. What's happened is SARS have advised us in 2022 that they are going to be applying this with effect from 1st of December 2022. So it's almost like a landmine that has been lying there in the Income Tax Act, and SARS haven't been utilizing it or implementing it. But what they've said from 1st of December 2022 is, guys, this is in the law and we will be applying it from 1st of December 2022 onwards. So it's not new law, it's revenue practice now to apply this law that's been there for some time.
Sure, and that characterization of it being a landmine was quite interesting. What motivated SARS to activate the landmine now and not before?
If we look at what has been happening in SARS, and particularly since the appointment of Mr. Kieswetter, who has been a very, very good tax administrator, what he's been doing and what SARS have been doing under his direction is tightening up all the loose nuts and bolts in the tax system. One of those is that people have turned a blind eye to tax for years and years and years. So there are many taxpayers who might be 3 or 4 or 5, in some instances up to 10 years behind with their tax returns. So let's assume I have a company that may have been trading for the last 10 years, but I just haven't bothered to put in the tax returns, and every now and then I get a reminder from SARS and I ignore it. What's been happening is that SARS have been becoming much more insistent that you must put these returns in. And I think that's been the trigger that has led them to say, guys, we're going to apply these penalties from 1st of December 2022 onwards. So you may be happy that you haven't put in 10 years tax returns, but we're not happy. It's going to cost you if you don't do it. So I think really it's about tightening up on compliance. And obviously, all that outstanding 10 years of tax returns might be a lot of revenue that hasn't yet been brought to account in the coffers of SARS. So just by tightening up on compliance, we've seen that SARS are collecting a lot of money that in fact has been owed to them for several years but hasn't been brought to account in Treasury yet. And that's one of the reasons why we're heading for such a significant surplus in the current tax year.
You mentioned cost just now. How large of a cost could this be for these companies? You mentioned that this has been in effect for a while. It's been there, but it hasn't been put into motion for quite some number of years. So what is the cost implication for those directors or owners of these dormant companies? What are the penalties looking like?
Okay, so the penalties they appear to be deceptively small, but they accumulate on top of each other. So they do aggregate, and that is really where the danger lies. So the smallest penalty is 250 Rand per month that a tax return is outstanding. So 250 Rand by itself doesn't sound a lot. If I've got a company that I haven't put in my tax return for 36 months, suddenly I'm looking at 3,000 Rand a year for the first year, 6,000 Rand for the first and second year, and then 9,000 Rand for the third year. So if we accumulate that, we end up with 18,000 Rand is in fact the penalty I've got to pay for my 3 outstanding tax returns. So suddenly it's a lot of money, especially if the company's been doing nothing.
So in terms of the revenue potential for SARS then, Neil, how much is SARS standing to make from these collections starting, I guess, in the next tax season?
Sure. Unfortunately, I don't really have an insight to that, but what I can tell you is that, we probably have about 400 companies. We're a fairly small practice. We have about 400 companies. Of those, I would say something in the region of 25%. So sort of 80 or 90 of those companies would fall into the definition of dormant companies in that they are not really trading or not trading on an ongoing basis. So if we put that fraction onto this, it could be a lot of money for SARS. And it's money that's not budgeted to be collected. In terms of, the gross income earning from Anglo-American Gold and so forth, it's fractional. But it still is going to be a significant amount of money. I don't know what it would amount to in billions, but it certainly would be in billions, the potential of this penalty.
No, that's quite helpful, actually. So in terms of someone who's listening now and they're thinking, but I haven't really seen some income coming in for maybe the past year or two, is that a factor in whether or not they still will be liable for penalties, the fact that they haven't seen any income inflows in the recent history?
No, not at all. And the fact that the tax return is outstanding is what's going to trigger the penalty. And I mentioned the figure of 250 Rand per month that the penalty is outstanding. That figure increases depending on what the profitability of the company has been historically. So the maximum penalty, in fact, is 16,000 Rand per month. And that is for a company that had above 50 million Rands taxable income. So if we pick something that's a little bit close to reasonability, if we had a company that made, for example, 1 million Rands taxable income 3 years ago, the penalty is 1,000 Rand per month, accumulating for each month outstanding. So whether the company has had income or not is irrelevant. What is relevant is that it is not tax compliant. So if you're a director of a company, you're a public officer of a company, it's not doing very much, but you still have the duty to get the tax returns in so that SARS can work out whether there's tax due or not. So it's a penalty on non-compliance.
So then for those directors, like I mentioned in the intro there, that someone might join a company because they were just asked to and they're not really involved in the workings of that company, are they also liable or is it the owner? How does SARS determine who is going to pay up that outstanding amount?
In the first instance, it's the company itself. If the company has no resources, then SARS would look to the directors of the company and say, you have the duty of governance over this company, and there will be a public officer. And the public officer is quite an interesting thing. There's always been in the Tax Act a public officer who is the person responsible to SARS for submitting tax returns. Now, that's the sort of discipline over that has fallen a little bit into disarray, and that is something that SARS are tightening up on now is who's the public officer. They want to know the ID. They want a picture of the person with their ID, so they know directly who is the individual who's responsible for the non-tax compliance. So, but technically, any director of the company is responsible for, by definition of the Companies Act, for overseeing the affairs of the company. If they haven't put in the tax returns, they're personally liable. I'm talking now company law principle. For SARS to now get a judgment against that person, that is another hurdle that SARS will have to cross.
Mm-hmm. And in terms of then trying to rectify the issue, how do stakeholders of dormant companies go about trying to fix the issue before the tax man comes knocking?
Okay, the first thing to do is absolutely be proactive. I mean, for example, what I've done, and you can do this quite easily, go to CRPC, the company's registration office, and you can draw a report, they call a spider report, of every company of which I'm a director. So in my case, there was quite a shocking situation. It was a couple of hundred companies. Then I've gone through each of those companies and checked the tax compliance status of those companies. Thankfully, they're all tax compliant. One or two that I had to bring to compliance status. So that if you want to know what you are potentially liable for, that's your best route, is to go through CRPC and draw the list of companies that you're director on. Then, how do you engage with SARS? SARS always welcome a kind of an approach rather than having to chase you down. So I would then engage with SARS and say, look, this is a dormant company, hasn't traded for the last 5 years. I've attended to the outstanding returns. I know that you can charge penalties. This is the first offence that I've had, or that the company has had, and apply for remittance of the penalties. Now, although SARS can apply these cumulative penalties retroactively, to date, and I'm talking from sort of 1st of December up until now, what they've tended to do is apply a lesser penalty. So they might apply a penalty of just 2,000 Rand or 500 Rand, what they consider to be a late submission. So it's my observation, I may not be right in terms of what's going on within SARS, but my observation is that they're applying the penalties at the moment fairly lightly and not with a heavy hand that they're entitled to in terms of the Tax Administration Act. So a good, open, honest approach to SARS to say, I'm sorry, I was unaware, but completely overlooked the fact that I was director of the company. Here's the returns. There's no tax payable. I'm asking you to remit the penalties. They might reduce it down to a simple penalty of 500 Rand or 1,000 Rand. That's a lot better than the kind of 30,000 Rand that might otherwise be the case. So there's not a lack of sympathy. It's kind of like, when you're watching a rugby game and the referee says, okay, guys, no more of this foul play, or else I'm going to start giving yellow cards. We're at that stage. They say, right, behave yourself. We want to see you moving towards compliance, and we're not going to be heavy-handed with you. But that kind of tolerance will vanish as time advances.
Mm. So cooperate with the taxman and they'll be nice to you, basically.
Pretty much. And we do ourselves a disservice if we demonize the taxman. But revenue officials are people with a job to do. And my experience is be civil, be polite, be humble, especially when you're in the wrong and you're likely to get a compliant and obliging person on the far side. I think if I can digress slightly, I've had exposure to revenue officials in other countries. We're actually very blessed with the people we have working at SARS, because by and large, we're dealing with people who want to cooperate with us. And at this stage, getting tax compliance up to date is without doubt one of the major drives within SARS.
Yeah, sure. No, I hope your advice is listened to and followed. But for those that aren't listening to the advice and are like, no, what are the consequences could they face for not rectifying the situation in good time?
Okay, the consequences are hardening attitude from SARS. Now, SARS do have the ability. Let's say I'm the sole director of a company and I've ignored that company's affairs for the last 10 years. SARS send me a final demand for submission of returns and I ignore it. They send me a final reminder or further demand and I ignore it. SARS do have the ability to go down to the magistrate's office and put a judgment against my name. And doesn't have to be heard by a magistrate. They simply lodge a statement. that says that I'm responsible for the default of this company, and they can lodge a judgment against me. And I know that it can happen because it has happened to me in something that I was completely unaware of. So there's certainly, and that was because my address was not up to date. So the demands had gone to a separate address. And that almost is your best case scenario. Once SARS have got a judgment against you, whether it's against the company or against you in your personal capacity, they then have the ability to go into your bank account and take money out of your bank account, or instruct the bank to take money out of your bank account and pay it across to them. They have the ability of going into the business and instructing the debtors of the business, people who owe the business money, to pay directly to SARS, and I have seen that happen. So you really don't want to get rough with SARS because they have a much greater opportunity to become rough with you. So the message is really a simple one. We want you to be law-abiding, if I'm speaking for SARS. We want law-abiding tax citizens. And if you're not going to oblige us with that, we're going to have to get increasingly harsh in the way we deal with you as a non-compliant, non-cooperative taxpayer.
And that is Neil Hobbs, tax specialist and CEO of Hobbs Sinclair. Thank you, Neil, for the insight.
Pleasure.
You've been listening to Small Business Conversations with Akona Machoba. To listen to more Moneyweb podcasts, go to moneyweb.co.za, the Moneyweb app, or your favorite podcast platforms. Moneyweb, your trusted source for business and investment insights.